All right. Welcome. Let me hit this go live on Instagram. Welcome, everybody. We're back. It's been a while. We are your friends at the Legacy Wealth Capital Group. I got Sean and Kyle in the building with me. How y'all been, gentlemen?
Great,
Good, good.
good, great,
Doing
great,
well.
feeling good.
Thank you. Thank you. Thank you. Thanks for asking.
Phenomenal. So, I got a good agenda for y'all tonight. I want to talk about feast and famine. Let me go live over here. You got to go live in like 10 places to get this up and running. Put it over here. I want to talk about feast or famine. We see the news. We see the talk about taxes. We see the talk about tariffs. We see the talk about the trade war with China. We see all of these different things that happen, and we see it from a media perspective. One day, it's the markets are up. One day, the markets are down. And so many individuals don't know necessarily what to turn. Now, I went to a mergers and acquisition conference today, and it was a middle market conference. So businesses in there or firms or PE firms, most of them are doing north of $50 million in revenue a year. And for them, they notice some of the market shifts as well. But I would say they're not as swayed by the news as everybody else. And I just want to kick it off to start with, from your guys' perspective, what you're seeing in the marketplace right now. Do you believe it's a feast, a famine, or somewhere in between?
Yeah. So I was always taught when the market goes down, it's buying opportunities, right? Uh, but what a lot of people have problems with is is it bottomed out yet, right? So a good solution, right, in order to invest in a market is to put money in. Um, so, for example, if you have $1,000, right, so you might want to put in 250 every month or every 2 weeks or something like that.
Mm-hmm.
Then that way you'll get that. If it's going down, your prices are getting better, right? But your average per your share per average your average per share is going down as well if the market goes down. So I was always told that if you buy $250 at, for example, $1 share, right? It's 250 shares.
Yep.
$250 dollars at 50 cents a share is 500 shares, right? So now your cost per earnings is lower than $1. Does that make sense? So I
Mm-hmm.
was always told it's a buying opportunity.
What about you, Kyle?
Yeah. That's a very good question, and a lot of times, and I don't get me wrong the way I say this, but a lot of times that affects common people. So that's the ordinary, Joe, the 9 to 5, to pay attention to the news, seeing what's going on, and sometimes, and I feel, for years that it's just a scare tactic because it's kind of like this. I want to use this example. How many times you heard in the news, maybe a couple years ago, whatever, said that coffee drinking is good. It helps you live longer. And then after that, 2 years later, they say, "Oh, don't be drinking coffee because it's going to affect your blood sugar or whatever, something like that." And it's like, wait, it's the same coffee that we could drink 2 years ago. It's going to help me live longer. So it ain't like you drinking any different coffee. I'm still drinking Maxwell House. But how come every couple years now it comes back around? Oh, coffee is great for you and it helps your skin. So when you say feast or famine, it's kind of like those individuals that get caught. Don't take an aspirin, because if you got basically high cholesterol or something. But now it's like take an aspirin, so basically, so you'll be good to go a few years later. It's always something, and it's usually a couple years down the line or whatever. You know, drink Diet Coke or drink Diet Pepsi or whatever, Coke Zero because it's good because you get diet. Don't drink this because it causes cancer in rats.
Mm-hmm.
Feast or famine, you know what I mean? So I always just think that that's for the common person who's basically riding the line and that's it, a rolling. But we don't play that because it's like We don't care what's going on. We make it happen.
Yeah. And,
Great
and to
answer.
and to
Go for it.
add real quick to Towers, to add on to what Cal was saying, a larger companies, it's like for a larger company, right? It's like turning a ship, right? Everything is it's pretty slow for them to react, right? Whereas a smaller company, they can maneuver a lot easier. So yeah, it's going to affect them a little bit more, especially if they are publicly traded or whatever.
Okay. Yeah, a lot of things that they were saying today was, and I want to get into these pieces because I think it solidified what we're here to do and why it's important the message that we're trying to send. But they were talking just in that for private equity, Q1, well, January, February looked pretty good. They were actually doing better than what they did in 2024. They said the only correction is really coming in the lending part of it. So interest rates, it's things that they may have been bullish on before. They would take a flyer. Private equity and venture capital, they're pulling that money back a little bit. They're not taking risk as much as they would if the market was a little bit different. But it's not that they're not doing business, they're doing calculated business. And I think what happens with small business owners is that we don't understand a calculated risk, and everything seems like it could go wrong and we can just lose it all. And so what I was just learning by listening to these larger companies is you do have to pivot, but that pivot should be calculated and it's not out of fear. It's just out of correction from the market. You have to study the market. That's another thing that I noticed. Most of the people that were talking, whether they were on a panel or whether it was in networking, they're studying the market. They're reading things about the market and they're following the data, not the news. And so I want you to listen closely if you're listening. I want you to hear me. Follow the data and not the news, because the news will have you feasting in the morning, famine at night. Have you famine in the morning? Oh, everything dropped overnight and it bottomed out and we're here. And then it all comes back later in the evening. So you have to actually follow the data behind this, behind the market, behind businesses being bought and sold, behind stocks being traded, so you can make the right decisions along the way. And now I'm going to share with you guys, and I want you to weigh in on these three things that these businesses in the middle market, these firms look for. Number one, they said the majority of businesses that come to them are not sophisticated enough. They come way too early. They don't have everything needed, and they feel like from a private equity standpoint, when they're trying to acquire or bring them underneath as a portfolio company, they have to educate them. The seller isn't necessarily ready to sell because the business is their baby. They're emotionally attached. They've been doing this one thing for 20 years. And so when they come to the table, they have little education around what selling or taking on an investor even means. And I know that Sean, both you and Kyle talk about your business being your baby and that mindset. So I'm looking at and listening to people who are explaining don't come to us too early. Why do we think businesses want to run to some of these firms and they just don't know that they're too early? What is it that keeps them from learning the right stuff to actually get to the table and then be able to get a deal?
Yeah, I would say, on that, um, it's funny when you're making more money than you've made before. So now you think you've arrived. And I hate to say it, but sometimes we as a people, we don't really know what money is. So we think having some, 3 months of, basically savings or whatever put to the side, we're doing well. We're doing good. We don't understand generational wealth. Okay, we're just now getting to the point where we're making money and we're okay. From the 50s and the 60s, and now we got a house and a car. We're doing okay. And some people that are doing better than that. If I'm doing better than somebody in my neighborhood, all right, then I made it, but I'm still in that neighborhood. So That's what I feel. If you're doing better than everybody on your block, oh, you made it. So now you can go to those meetings.
Yeah, and I think people just don't know, right? A lot of times going to these larger hedge funds or VCs or whatever, expecting they're going to do your deal because like we always say, everybody has the prettiest baby. Well, you're pretty much an idea for them, a hobby, right? You bring in 10, 15 million, or you proving yourself. You have investors, 100 investors, 200 investors. Now they might take a look at you, but you their their philosophy is they don't want to be involved in something that's going to be a niche, right? A fly by night company. They want to get involved with something that can possibly do $1 billion, a unicorn company. So, it's different reasons. Cal's 100% correct. You know, and 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 what I believe is I believe what I'm saying is correct as well. Because again, everybody wants to go to the VC until they let them know, well, are you doing at least 100 million in revenues or 50 million in revenues or whatever. So
It's funny.
And
Oh,
remember this too. People can only see 3 times what they're making. So they really don't have the vision to be beyond that. I can't tell you how many times, we talk to somebody and Sean's like, what's your $1 billion idea? And then like you like blew them out the water, like how much you want to raise? They're talking about, oh, 500,000. Like what? You know what I mean? What do you mean? You could go get that from 10 family members or whatever, 500,000. But you don't have a big enough network to get $1 billion. So how you going to get it? You've got to get education. You've got to get in the right networks. You've got to be around the right people. And again, one of the things that we kind of talk about is that if I'm the smartest person at the table, I'm at the wrong table.
very good. And it's funny that Sean, you said 100 million because there was an investment banker from J.P. Morgan there, and he was saying we only deal with 100 million plus in deals
yeah,
because they asked him, "Oh, what?" The question was, "What would you say to someone who wants to sell their business if they just came to you and told you they want to sell your business?" He was like, "Well, if it's not 100 million, then there's no conversation."
Hmm.
And for I think that a lot of us we see the names of these companies, but don't realize that we're not their ideal client or
right,
customer. And so here are a few things that I took away that they basically said that you need to have in order to even come sit at the table, to even have a conversation. One, they said mindset. You have to understand that when you work with a VC or a private equity company, especially private equity, likely they're going to take 80% and leave you with 20 and it's no longer your company. The guy was like, sometimes the founders forget that it's no longer your company. You're still here, but it's not yours anymore. So you're working underneath their system, their processes. They want to bring along the team and help them grow and scale the business. But at the end of the day, you have to have the mindset and be ready to know that when you take that money and you give away that equity, is no longer yours, especially if they get to control and share. That was number one.
yeah,
Number two, infrastructure. They're looking for businesses that not are not led just by the founder and it's just the founder. They want systems, they want processes, they want infrastructure. And today they want you to have some level of AI. They want you to have some sort of AI, whether it's automation, whether it's software, whether it's autonomous agents, whatever you want to call it. They want you to have that in place. And number three, the books need to be right. They don't want cookbooks. They don't want books that you don't understand really where the money's going, that the owner's living off half of it and it's coming straight out of the business. They want straight books because during the due diligence period, they are looking and going through all of these things. And something that, and Sean, this is what I want you to come in on, something that I didn't know about and it was interesting to me. They said nearly every deal that you do, there's always some issue. Like there's never a smooth M&A or
yeah. It's
acquisition
always,
or
yeah.
any kind of thing is never smooth. There's always a gotcha. And I
Yeah.
know you've been in that, you've done that. What are some of the major issues that you've seen in those types of transactions?
I think number one, like I always tell people, is don't. So everybody's. If you're looking at doing a merger or acquisition or whatever, right? Make sure it's on your terms, right? If somebody is offering, let's say, 20 million, right, for a piece of property, um, I mean, the environment right now. Do you think that it's a lot of people that's going to be spending 20 million right now in this environment? So that's not that wouldn't be a good solution just to give somebody 20 million like that, right? But what about seller finance? What about giving up some shares in your company or something like that? What about leverage buyouts? I mean, there's so many different options that you can do in order to, for example, purchase that $20 million property. I mean, we did a deal. Um, Basically, it was a company was doing 10 to 12 million a year. We gave them 80,000. First of all, they wanted 12 million, right? That's what they want. No, they wanted a little bit more than that, probably like 15 million, right? We gave them 80,000, and we gave them some shares in the company. And we said, hey, these shares are going to be a lot more valuable than if we gave you this money. He said, okay. So we shook hands, we signed a deal, and the next audit of our company, our revenues increased 10 to 12 times.
Hmm.
So never do a deal on the person who's selling terms. Always do it on your terms because, again, especially if you have investors, you have to do what's best for your investors.
Kyle, what about you? What do you think?
Yeah, Sean's right. I like the term. We'll give you what you want, but it's on our terms. So a lot of times when a transaction, an M&A or something like that might be going on, the person who's selling is expecting their terms. And when they're expecting their terms and how they want it, that's when the minutia kind of gets in there. Then it gets a little bit mixed up. Did you get a chance to take a look at that clip that I sent you today?
Yeah,
You
Carl
saw
Kanai,
that?
talk about it. I was going to
Right.
actually bring that up, but go into that.
Well, basically, 'cause like I said, he went into a deal, right? It's just like we're talking. He went into a deal. He expected it to be one way. And then after that, all of a sudden, he took it to his attorney, which is a very vital point. Make sure you got an attorney. Okay, stop trying to take it to your accountant. Take it to an attorney, especially a business attorney, not an attorney that practices law because you broke your leg or something. You know what I mean? Take it to a business attorney because they know and they're used to those contracts. Well, he looked at the contract and said, "Hey, man, this is not a good contract." And not only that, you're going to lose your logo. And so you remember what he went through to get the logo, and he's like, "What?" And so all of a sudden, the guy said he blew it up, and now he's like, "Look, hey, you know what? You messed up the deal. I don't want to deal with it." And he's like, "Well, I want my company back." All right, pay me 12 million. And he's like, "I got 12 million. Okay, well then I'll give you another option. Pay me 500,000. You know, but
Every quarter.
stipulation: if you miss one payment, one payment, it all comes back to me, your logo and everything." And then his lawyer told him, "Don't sign that deal." And what did he do? He signed it anyway. But thank goodness for them, they got it done. There's always something. It's never going to go the way you plan because that's just business. But that's why you know they were telling you guys at that event, you got to have the mindset because we already know that it's never going to go the way it's supposed to go. I can't tell you how many times in my book when I wrote, every Friday the attorney kept saying, "Oh, well, you know what? That shell didn't look good. Oh, it was a dog with fleas. Oh, you know what? Let me take a look next week." And then all of a sudden again, it's like, "Oh, well, let's wait till Friday, see what happens." And I was like, "Okay, oh, we need another, 20,000. Oh, this was not good. No, I thought it was good, but wait till next Friday." I mean, it was like Friday after Friday. I started hating Fridays. And then we got to the point where I was like, "Look, You get me a shell, you got this amount of money, but get me a shell, give me my money back. And that's what we went through. But
And,
see,
and,
now,
and
we
I'll
got,
say this. I'll say this too, to just to kind of put a stamp on what Cal's saying. Don't be scared to walk away. No, don't be scared to walk away from any deal.
exactly what we did. We didn't get our shell from there. Walked away.
That's good. It's something that both of you said that they also said at this conference was, and I think here's another thing that small businesses necessarily don't do because of cost or investment is they don't get professionals. And so they said the same thing. Don't, if you're doing a merger and acquisition, you're on the sell side or buy side, don't go get a asset attorney, a bankruptcy attorney, a divorce attorney, a criminal law attorney, your brother-in-law who might be a real estate attorney to do these deals, because they said the number one issue they see outside of gotchas and pop-ups and things that you didn't think about was the wrong attorney negotiating the deal.
Yeah.
They don't have the enough experience to negotiate a sell side transaction. And so they said basically they were like time kills all deals. And so if that deal lingers long enough, it's going to die. But what causes it to linger a lot of times is you have your cousin-in-law doing the sell side when they don't understand M&A transactions. And so, and I talked about this on another panel just earlier this week. As you grow your business, you need to get the right people on your team from that professional standpoint. Who are the people you need? You need an insurance agent or company for business insurance, liability, or professional liability. You need a accountant at some point. As you grow, that may morph into a bookkeeper, an accountant, and a CFO and a controller. In the beginning, you don't need all of that. But as you grow, you will need these people. You need a competent business attorney. And not just any business attorney, like Sean said, the one that will show up in court. Because my real estate mentor told me that year back in 2014, he was like, never deal with an attorney that will only do document. Because this is what happens. People will go to a attorney who would do a document review, or they will give you a contract, and it's only $500, $1,000, but they won't defend that contract. And so when you show up in court, you might be left hanging, holding the bag because you went to an attorney who's almost like a diploma mill attorney. He's a contracts attorney. That's all they do is write contracts, but they won't defend them for nothing. And Sean, you brought that up, and that reminded me that my mentor told me that years ago. Only work with attorneys that will defend the contract they give you in court. The other thing they said outside of blowing that deal up was just negotiating in bad faith. And not really negotiating bad faith, but saying things like, well, if you buy my company, Miss So-and-so has to be a part of it forever. Or you can't change the logo, or you can't change the colors. And it's like all of the little things that people nitpick on and try to put inside the agreements can make a deal fall apart. So I want to pose this next question to you guys. Whether it's going public, whether it's buying a company, preparing to sell, how important is the due diligence period? Or how important is due diligence as a whole?
It's about as important as breathing. I mean, it's as important as breathing. You know, it's you got to, if you're looking at putting in capital or money or whatever, business money, loans or whatever, you have to understand everything as much as you can about whatever you're like, the company or whatever, right? You have to, because I mean, you can get a private company and it could be in litigation right now. I'll give you an example. So we was on a call last night, and come to find out this guy had did some terrible stuff in the past, right? If we wouldn't have done due diligence on this guy, and let's say he would have got a hold of this NASDAQ company, they would have came back and probably looked at us and said, You guys didn't know this guy was like a criminal. You guys don't know that he has like some securities fraud and stuff like that. So that stuff could come back and bite us. So not only would he get in trouble, we would get in trouble. You know, and but again, due diligence is right there on the same level as breathing, is air rather. You know,
Mm.
And it could mess up our relationships
yeah,
because now if we brought that to the table with our relationship and now they're involved, now they're in the middle of the minutia. They're in the middle of the mess. So now it's on us. So now we're not going to be able to bring anything to them again because we didn't do our due diligence
yeah,
to turn around and rock and roll. And we kind of talk to this about and with our company, when we bought our shell, we had to take a look at the shell, and so we looked into it, and we had to make sure everything was there because we did a reverse merger. We were going public, and so when we did that, we were looking specifically for a piece of documentation that was inside that shell. Now think about it. It was just a folder, right, with a bunch of paper. There was everything from the company from when it got started. But we had to have, the due diligence done because we need to make sure that if we bought this and paid the money for what they were doing, it was with investors' dollars, that now we can get this done, what we expected to do. And inside that shell, there was a debt. And this is the reason why I said we love promissory notes, because if a promissory note is aged after 2 years, those that note can become free trading shares. And so that's exactly what we were looking for. But we paid an additional attorney to take a look at it, $10,000, just to take a look at that. Again, once again, we went out, we got extra, legal counsel who was what? An SEC attorney. And then they looked and they went through it. And guess what? Within 10 minutes, they found it. We paid $10,000 for 10 minutes. Was it worth it?
I believe so.
Yes, we wouldn't have went public if we didn't know that.
you
Because we
know,
had to make sure we could take that debt. We split the debt. We turned around, took half of it, put it back in the treasury, took the other half, and created 100 million free trading shares. That 10,000 was worth it.
yeah, definitely. Yeah,
Wow.
imagine too. Imagine if you're buying real estate, so you're doing fix and flips, right? And the ideal is, to buy a, uh, uh, you know, 60, $100,000 home. You may put 10, 20 grand in to up little upgrades or whatever. And then you're able to, sell it for 120 or something. But imagine if you bought that home, that $60,000 home, and it cost you 60, 70 grand in upgrades because you didn't do your due diligence on it. It messes up everything. So now when you go to sell that home, if it's in a low area where the homes are averaging, right around 120 or something, and you're spending 120 or 125 or whatever, you could be in a losing proposition.
Hmm.
So you got to be extremely careful and do due diligence anytime you're looking at any type of acquisitions, purchases, or anything on a major scale.
One thing I wanted to bring up and ask you guys was, especially in your time with going public, other times with M&A, working with other businesses, they talked a lot about something that I didn't think you really had to do. I've heard other people say it, but they talked a lot about, I would say, courting the owners. Meaning, if I look and I want to acquire a company, I might take that owner out to lunch, get to know them a little better. And I think this may be more of a, if we're bringing them in under a PE deal and they kind of stay, or they're going to stay for a year, you court them a little bit. Do you guys still believe that that is a necessity to kind of get to know, take them to dinner, woo them a little bit to build a relationship before you move into that LOI purchase agreement phase?
I do. It's always it's always good to break bread with someone who is interested in whatever you have. Um, what was it last week? We went out to dinner with a potential client. Cal, was it last week? So, and this guy, if he invests, he could be a good referral for other people. You know, he already referred us one person already, but he's a well known person. You know, and he knows a lot of people. So yeah, you always, I won't say always, and it depends on your business too. But yes, courting people is always good.
And what we do, I believe so, especially when you're dealing with like high ticket items. Because think about it, what we do, we're going to bring investors to the table. We want to know this person's, um, what's their, how do they respond? How do they act? You can tell a lot when you sit down at a meal. They get a little bit more comfortable. The guard comes down, more. Some people might judge people by, what do you drink? You know what I
Hmm.
mean? When you sit down, or do you feel comfortable? You're gonna get a beer, you're gonna get some scotch, brandy or whatever, or you're gonna drink a tea, iced tea or whatever, lemonade. So a lot of times, we'll always ask them what they drinking first because that kind of sets the tone. You know what I mean? I don't drink anyway, but still, just to be able to have that kind of conversation, and once you see are they vegetarian or whatever, something like that, you get to find out just a little bit more about them. And remember, all you gotta do is ask questions. Questions mean genuine interest, and they're
Yeah,
going to tell you everything they need to know. So I always like to use that as a, basically, Sansu, the art of war. You know what I mean? Basically, just find out a little bit more about them because the guards are shielded, let down. A lot of times over the phone or whatever, they're not going to give you everything or they're going to hold back. But after about 10 or 20 minutes or so, they feel a little bit more comfortable with you. You may feel a little bit more comfortable with them, and then you start talking, start pulling out the phone, and start showing pictures of your family and things like that. You know, and then okay, this is somebody I'm going to be getting. We're going to be getting in business together. I want to get to know them a little bit more.
and,
Good.
and people love talking about themselves. Especially if you ask them questions, they love to talk about themselves.
Yeah. Yeah, that's good. As I was just sitting and listening and watching the different people network, plus I felt like I was underdressed. I had on a polo shirt, everybody else in there with a button down. I said, might be a little underdressed for this one. At least I had on some khaki pants and some decent shoes. But I noticed that, and I want to bring this up. I want to bring it up and I want to just get your honest opinion. We know that that room was middle market, upper echelon. I am a fan personally. I like wearing a polo with the logo of your company on it. What I noticed in this room, it was all button downs, not a logo in sight. Not on their pins, not on their pads, not on their shirts, not they weren't talking about like you had the sponsors by which Legacy Wealth Capital Group was a sponsor. So our logo was out there. I got to send y'all a picture. Is there a certain, and let me see how I want to put it. Almost like you said, Kyle, in the beginning, and I would say startups, small business. Do we get too focused on the logo and I want people to see my brand and all of that? And these companies don't? Because then I'm trying to think, well, is this a big business thing? Because Coke's logo is everywhere. But I don't necessarily know if Coca Cola's leadership is going to go in a meeting with a Coca Cola shirt on. So, from your opinion, is the logo and your brand and having your notebook with your name on it, your pen, and you're showing up? I didn't see people just taking pictures like I have at other conferences. Everybody will take a picture. These people weren't just taking pictures, they maybe one or two. Is that a different atmosphere? What is it?
Well, you've heard the term "game recognizes game."
Yep.
So in that kind of, especially like in an investment environment, and we're just not talking about investment, but we're talking about like for Sean and I, investment banking.
Mm-hmm.
Um, it's a quiet, kept, tight knit community. I mean, they're not brash, they're not broad, they're not going to be up in there flashing or anything like that. There's no need to, because you're not trying to draw attention to yourself. You know what I mean? You're going to get the business. It's usually going to be relationship. Somebody's going to refer somebody. Like I said, we sat down with that the other day. Well, the reason why we were there because somebody referred us. So it was a referred, type of situation. And other than that, if it wasn't referred, we wouldn't have been there. But Sean and I showed up because the person who referred them, we respected them. And
Mm-hmm.
the reason why that person referred came because they respect that person first. So it's a tight knit, business and a tight knit community. And I just remember that, you just don't. It's not broadcast. You know what I mean? Social media right now really has kind of changed the game. But other than that, I don't know how many times you're gonna walk up on a J.P. Morgan or a Morgan Stanley investment banker and know it.
Yeah.
They could be in your grocery store. You don't even know.
Sean,
Yeah,
what you think?
I think it just depends on the industry, right? An insurance person, and the insurance person visiting, everyday people. Yeah, because yes, I think a logo or something like that is fine because a lot of times they need, first of all, they don't want to just let anybody in their house. So usually what happens is if you wear a little logo on your shirt, it's like, okay, I'm from such and such company, but if you're in a business that what we're doing, investment banking, it doesn't, I don't think it makes sense, right? I've made, I've sold so many things without a logo, right?
Mm-hmm.
I've raised capital, I've found investors, put together companies, took companies public, all without a logo. You know, nobody questioned it. Nobody questioned. Where's your logo at? Yeah, it just, yeah, again, I think your local everyday Harris Teeter person, um, Walmart, something like that. But in our industry, no.
I mean, even when we were running our public traded company, I mean, we even took our titles off our business cards.
Yeah,
President, CEO. I mean, we just give them a card because it just got to the point where it was like, man, there's no need to put your title on here. Just give your card because we just wanted to just be ordinary people. We didn't want to be identified. Oh, that's the black guy. They're the public traded company. You know what I mean?
Mm-hmm. Yeah, yeah. I felt like, seems like you said, when you in the group, there's no need for that. They're not trying to win business in the room either. What I even noticed was I felt like this wasn't a teaching thing either. This was a here's the news of the industry, now go network and go talk. But it wasn't someone trying to win business for another person, because I think in those types of rooms in the field that I got was this is a trading of information and where do people fit. And so I kind of found out where we fit in that room. If we work with business owners and founders that are kind of startup, they may have been in an incubator before, they may have done some work before, but then they lack execution and capital and a team, and they don't know where else to go. Then they come to us so we can prepare them, nurture them, help them, guide them, and then maybe they go public or maybe they enter the middle market. So we're like a bridge carrying them up so they can be prepared to get to that next level, because the next level don't even want to see them, don't want to talk to them, don't want to deal with them. And they were very upfront about that, which I like. It showed me where everybody in the puzzle fits somewhere. Their piece fits. You had investment bankers in there, you had private equity people in there, you had family office runners in there, and you just had the whole gamut of individuals in different industries too. And it really helped me because I heard a guy talking about he wanted to get into life sciences last week. Then there was a guy there at this thing that sold a life sciences company for $1.4 billion.
wow.
And it was like, he could talk to him because I don't know anything about life sciences or biotech or anything of that nature. So it's great to see, and Kyle, it goes back to what you said. If you're the smartest person at your table, you're at the wrong table.
Yep.
I didn't necessarily feel like I was the dumbest person at the table, but I did recognize, I did recognize, I see where I can be of value to them, and I see how they are of value to me. Because I did find a lady, she was like, if you got people coming through your program and they come out ready, we got capital for them over here. But we're not giving seed capital. They're giving growth capital. So a different round.
There you go. Yeah.
And I said, oh, well, we want to be in that front end seed capital part, get them ready, get them growing. And she said, yeah, we got money that we got to give away. That's another thing. There's money out there
Yeah, a
because for
lot of
some
money.
reason, everybody in this room had money. And everybody was talking about giving money. I didn't hear no famine. I didn't hear. Now they said that they were being particular. Sure, they were being calculated with it, but I didn't hear anybody in that room saying they didn't know where to go to get money. Like I was on a panel last night where people were saying they don't have enough money to save for retirement, and they're business owners. It's just two different worlds. Talk
Yeah.
to me a little bit about why do y'all think there's such a gap in the worlds? You got people sitting on here saying they're broke, barely make it as a business owner, and then you got other people saying we got to find somewhere for this money to go before the end of the year.
But you know what? It's funny because, well, Sean and I, we were on a call today. So somebody called us up today, and Sean and I, we have this conversation time and time again, and it just goes to show that, you know, um, even though I said, even though you're a business owner, even though you're making money, sometimes you still might be thinking that primitive way. And we
Yeah.
were on the phone today with a guy, and he's got what was it? I forgot him. What, 50 acres or something like that?
50 acres. Yep.
Right. So he bought 50 acres, right? But he used his own money. And so we were talking to him, and we're like, well, look, why don't why don't you do a regulation CF or whatever, do a regulation CF and then roll it into a regulation A or even a REIT, real estate investment trust. And he was like, well, I don't want to take anybody else's money.
Yeah.
I'm like, what are you talking about? Well, I don't want to take anybody's money. I just want to, because then I got to pay it back, whatever. I just rather use my own funds. And Sean and I were scratching our head. We're like, what? And so then as we started thinking, and we really was like, that's that, I hate to say it, but that's one of one of the hip hop guys. That's his method. And
Yeah.
we're like, using your own capital. We're like, what are you doing? OPM, other people's money. And then Sean brought up the fact that, Elon Musk is the richest man in the world. Guess what he's doing? He's
So raising
raising money.
capital.
He's raising money, and the amount of money he's raising, he's worth more than that.
Yeah.
Mm-hmm.
Let me say that again. Elon Musk, the richest man in the world, is raising money, and the amount of money he's raising is less than what he's worth. Does that make sense? Make that add up.
He could have just wrote a check.
Yeah. It could have just,
Even
it's
when
still
he
been
did the
okay.
whole
You know.
the whatever he calls it, the AI XA, whatever he calls it, he basically did that transaction, billions worth of billions in stock. He didn't write any money, no check, no cash changed, just did it in stocks.
Yep.
What kind of conversation do you think he would have with somebody that said they want to spend their own money?
He wouldn't.
They don't want to give money to anybody else. He would be like, next, get up from
Yeah.
that table.
They said that Elon Musk, whether it's right or wrong, no matter however you feel, if you're not adding value in the conversation, he leaves like immediately. They say he doesn't even entertain it. Like some people will entertain your conversation, whether it's worth it to them or not. They kind of just hang around. They want to be nice. They want to hear you out. They said if you don't pique his interest or show some type of value within a few minutes, he will walk out on you.
Yeah.
Wow. That's how it is, though. That's how it is. Anytime you're pitching a deal to a high net worth individual, you have like, first of all, you got like 10 seconds, elevator pitch, right? You got like 10 seconds to have him say something like, so explain, tell me more, right? But if you don't pique his interest, you wasted an opportunity.
Yeah, I had an attorney today I was talking to, and I got him with because I have the elevator pitch down, so I just give enough. I don't like doing that long winded trying to tell my whole story. You eyes start glazing over, you lost them. So I told him a little bit. He was like, "Oh, that's interesting. Tell me a little bit more." And then I told him a little bit more. He was like, "Oh," he was like, "How do you get paid?" And I said, "Okay, this is how we get paid." He was like, "How much is it?" And then I told him the three tiers and three prices. He was like, "We need to meet." I believe I got something for you. So it goes to show that you don't have to give people everything. And I also saw the flip side. I was waiting to talk to a guy there, and another guy was talking to him. This guy talked to him for like 10 minutes about stuff that didn't add value to either one of them. It was just
Yeah,
conversation. And I could see the guy looking around. He started, trying to look at other people. Some people don't know how to convey their offer, their value in a short enough time span to give someone else the opportunity to say, that's interesting, let me know more, or that's interesting, let's meet up. They want to talk their whole story out and then lose the opportunity altogether. And then sometimes you gotta learn when to be quiet. Say what
yeah.
you gotta say and be quiet.
I mean, listen, everybody know I have a sleeping problem, right? If you get on the phone with me, I would press mute and I would go to sleep. Seriously. Um, we get on a lot of phone calls, right? Seriously though, we're on a lot of phone calls, right? And people will pitch their product and tell me how great it is and tell me all of this fabulous stuff about their company. And Cal and I will be texting each other like what is this guy talking about? I don't know. Did you hear any revenues? I didn't hear no revenues.
Right.
I didn't hear. I guarantee you he don't have no revenues. And we'd be like, I bet you he don't have no revenues. But I lose. It's almost like I have ADD, right? I'll lose focus if you're just pitching and you're just talking and you're trying to sell me on the product. My focus is gone. Seriously.
I think that's the key. I think instead of people coming in and just genuinely trying to figure out how it can be a win-win, they want to sell you something.
Yeah.
And not only do they want to sell it to you, they want to convince you that it's the best.
Hmm.
And you don't need convincing if the product can stand. Like that's just like Shark Tank. Kevin O'Leary's like, okay, you said all that. What are your sales? I'm
Right.
trying to get to the numbers
Yeah.
because at the end of the day, that proves your point. Now, if you're pre-revenue and you're a startup, then you need to be able to convey the idea, the vision, but you gotta let people bring that in and not just try to throw up words to make someone get feel like your product is good. If it's a great idea, it's a great idea. If it's not, it's not. I do the same thing. I'll start doing work. Like, okay, they still talking. I had a conversation with a couple of different people, and one person talked to me for at least 20 minutes. Like, this was supposed to be you guys are just coming and we're doing like asking questions. Like, ask me a specific question. This person gave me an update for like at least 30 minutes, 20, 30 minutes. I was doing everything else because that's not what I asked for.
Yeah.
And it's not relevant to why I'm here.
Yeah.
You, I've learned this, especially on webinars where you do Q&As or you do things like this. And I might start doing it in networking. It's like, I'm going to ask you a few questions and I'm going to let you ask me a few questions. But a question is a what, when, where, why, and how. If it doesn't start with any of those letters, don't even go through the sentence. I don't want your life story. I don't want your all this other stuff. What is the question? And let's get to the root of it. Now,
Yeah.
as
Right.
we get ready to close out, I want to recap kind of what we talked about. For everybody that's listening, you may have jumped in late. We're talking about feast or famine. Number one, stay out of the headlines. You have to, and I hate to do this. Let me segue. Y'all see all this Shannon Sharp mess going on?
Now that right there, that's straight out foolish. Sean and I talked about that this morning too. And I hate to say that, but I don't understand how you can put yourself in that situation.
You know, there were talks about possibly him getting people to come in and buy out pieces of either his network or something. It was like $100 million.
100 million
Yeah,
dollars.
That's gone.
yeah.
Yeah. Because of that, somebody didn't sit down and have lunch with him or have dinner with him. And that right there, that's what happens right there.
It always in these situations. It always helps being married. You know, it
Yep.
always
My
helps being married.
goodness. All right. So stay out of the headlines. If there's famine, it's because your mindset is wrong. Because there are people, businesses, companies that are feasting. So stay out of the headlines, get in the data. If you want to have real conversations about your business growing, you have to have real foundation, product market fit, some level of sales, or pre-revenue idea that's solid, infrastructure, team, and a blueprint on how you're not the bottleneck in the business. If you are planning to sell to a PE firm or you go venture capital, you need to know that you may lose your business if you choose to. If you give them 80%, they're going to take it and you got to deal with 20, you no longer own it. That's a negotiation thing. That just doesn't happen. It's just not people taking it over. That is a decision that you have made, and likely you made it because your brother-in-law is your attorney. So make sure you have the right team around you. The attorney that fits what you're doing, whether if you're doing capital raise, you need an SEC attorney, get that attorney. If you're doing contracts and business, get those attorneys that have the experience and are willing to go to court and defend the contract or agreement that they put in place. At the end of the day, everything that goes wrong in a business is the owner's responsibility and the owner's fault. Whether you did it or not, it indirectly links back to you. So you have to take ownership and put your business in the right place. Any last things you guys want to share before we get out of here?
Yeah, I'll share that. That was really good wisdom. What was put out there. I mean, I don't know if a lot of folks caught those nuggets that were out there. I hope you guys did, but I think probably the best thing that was said that especially when you talk about feast or famine, is have the right attorney. Have the right attorney, and what you need to do is make sure that that attorney can read your contract and go over it and protect you. CYA, because whatever when you sign on that dotted line, make sure you know. If you don't know, make sure somebody knows what you signing. Because if not, like I said, you could lose your company or you could put yourself in a bad situation. And then now, instead of you thinking that you got a great business and opportunity, now you just created yourself a job and a nightmare. And whatever way to get out of it, I don't know. So yeah, just make sure you got the right attorney representing you and making sure that they sign off on it, but you at least make sure they know what they're signing off on for you.
Shaw, what you got?
Yeah, I would just say I would say to add on to this, all attorneys are not good attorneys. Just because they have that attorney name, you want to get people with experience, with experience in that particular industry, but not somebody that just graduated from law school, because that can really hurt you. You know, um, because a lot of times there's book knowledge and there's actually a knowledge on how to do stuff the right way. Does that, if that makes sense? Hopefully that makes
Mm-hmm.
sense, right? And basically, what I mean is uh, there's many different ways of doing different projects, um, but the book may only have one way, right? So you got to have lawyers that have a little creativity. Our lawyers have at least 3 decades in the industry, so he's pretty much seen everything. Whereas somebody that just came out of uh, college, they probably didn't see a lot. They it was all theory for them. It's all book work, right? So just all attorneys are not good attorneys. Make sure you have some really good attorneys.
Very good. All attorneys, while they are maybe good, they're not all weighted the same. And it definitely does depend on experience level. That's just like getting a barber that just come out of barber school. versus a master barber. I asked my barber one time, I said, what does it actually take to be a master barber? And she was talking about the years of experience, the testing, the business stuff that you have to learn and go through. It matters. And so I remember one time we went to a barber and he was fresh out of barber school, had my stuff all back here, and they was pumping him up. They was pumping him up. They was like, "Ooh, you doing a good job. Ooh, look how you doing that." I'm like, man, I got the new guy in the new chair. I was probably his third cut. I'm like, man, of course you have to learn, but I don't want you learning on me, especially
Yeah.
if you're doing big deals, big things, and you don't want to lose big opportunities because you have a fresh person that may not know all of the negotiation tactics. But thank you all for joining us. We're going to wind this up and get out of here. We appreciate y'all. We will be back again next week. So continue to follow us, like and share this to your friends, your family, anybody in business, because we're talking to business owners who want to grow and scale. So make sure you get that to us. We will talk to you soon. Have a great one.
Have a good one, everybody.